going to do is talk about the implications of regulation and innovation in the payments industry. And there was a report done, the 2012 World Payments Report, that was done by Capgemini, RBS, and EFMA, and it explores exactly that. Joining us to discuss this is Brian Kaplan. He's the editor of The Banker. Also with us is Kevin Brown. He's the Global Head of Transaction Services Product at RBS, and Jean Lassignade. Gosh, I hope I pronounced that correctly. Chief Sales and Marketing Officer, Capgemini Global Financial Services. Nice to have you all with us, gentlemen.
Morning.
Let's start with you, Brian, if I can, first of all. Tell us a little bit about the background of the global trends that we've been seeing and regional trends in the payments industry.
Okay, well, the report, which is the 8th annual report that's been produced by RBS, Capgemini, and EFMA, identifies three main areas. It focuses on three main areas. The first one is the continued growth in non-cash payments. So even though in Europe and the States we're seeing very slow economic growth, in fact, the growth in the non-cash payments area is still very rapid. And then when you move on to the emerging markets, places like China and Russia, you're seeing 30% year-on-year growth, which is truly fantastic. So that's the first trend. Secondly, we're still looking at a landscape which is very heavily regulated, right? So in the report, we identify 32 different regulations that impact on the payments industry. But then I think the third and the most exciting part of it in some ways is the fact that the regulation is not all negative for the payments players like the banks. I mean, there are actually opportunities to lead innovation on the back of the regulation. And the report builds up a case for building innovation into the payments area.
Okay, what are those opportunities then that this report throws up for the payments industry?
Well, certainly when you start to look at the trends and just building on what Brian said, there's quite a distinct split between the mature economies. So if you look at the numbers, if you look at the overall non-cash payment growth, you're talking about around about 7%. In the mature economies, that's around 5%. But then when you look at some of the growth economies, you're looking at 16, 17%. But there's some interesting different underlying themes that come out. So we've seen a switch to debit card transactions. So now 1 in 3 non-cash payments are debit card related. It's very difficult to actually pinpoint the reasons, but you can surmise that there's potentially a change in terms of appetite for credit on credit cards that's causing the switch to debit cards, but also the increased innovation around the use of debit cards for smaller transactions is driving that volume growth. I think the other sort of significant statistics that come out of the survey are around e-payments and mobile payments, and I think this leads into the innovation. So we're seeing, from an e-payment perspective, a 20% growth, but for mobiles in excess of 50%. I think mobile's quite a broad term, and
Which countries are leading the growth for you? I mean, I know emerging markets is a big space, so which in those countries?
Well, certainly countries like Brazil, particularly, but I think there's quite a broad growth from a mobile perspective. But I think the one thing that we're starting, it came out of the session that we had yesterday in the interaction, is that you need to start segmenting what you mean by mobile, because it's not just, it can be mobile as a terminal for your bank account versus mobile as a payment instrument itself. So it's quite interesting looking at that drive. But that's certainly driving both innovation from a person-to-person payment, but more importantly for transaction banks, the ability to acquire that from a client perspective for the corporates.
Jean, tell me what you think of what we've been hearing so far and other bits that you can pull out of the report for us.
I think, as it was said, first of all, very interesting is that this is a very dynamic industry with the growth that was mentioned, both in the historical country as well as developing economies. Second, this innovation around mobile, around leveraging all the different technologies. And then there is a whole section around the impact of regulation and industry initiatives. In the report, you'll find that there are about 32 very significant initiatives that are impacting the payment industry in the non-cash area. about half of them, 50% of them, have a direct impact on potential innovation of this industry. And what we observe in the report is that you have a sort of symbiotic relationship between the potential hurdles that heavy regulation apply to ability of the bankers to innovate, as well as the potential stimulation that these regulatory initiatives and these industry initiatives drive in terms of pushing innovation there.
Tell us about, when people speak about innovation, it's pretty broad, isn't it? Tell us practically what are the things that you're innovating or could innovate in this industry?
Yeah, I think practically, as an example, we could say that regulation push, better service for customers, transparency, making sure that each and every customer can be served in an open way, in a transparent way, in a competitive way. So obviously, that's a huge stimulation for all, the institution and particularly the bankers. And if you make the link with a survey we made, questioning the executive of the banks, saying, when you're thinking about innovation, what does it mean? 67% of them said it's extremely important for customer retention. 60% of them said it's extremely important for customer acquisition. That's very good, if we may say so, because it means that everything is now focused toward the customer, saying how could we make sure that our proposal, solution, etc., better serve what all the customers, both persons as well as corporate, do expect from us.
What about best practice then? What are the things that you're seeing in the industry, all of you, that is innovation that helps to improve customer retention and customer acquisition?
Okay, well, I mean, one of the interesting things, of course, is the role that non-banks are playing in the market at the moment. So a lot of the innovation is being, I think it's fair to say, is being driven by non-banks. And probably what we expect to see later on is the banks try and reclaim that territory. But clearly what has to happen is banks have to engage with younger customers on the retail side. So if you think about something like payment instructions, now what a young customer wants to do, instead of going to their bank website to do their banking, they want to go to Facebook and go straight through and do all their stuff from Facebook, right? These kinds of things are becoming possible, even if they're not being led by the banks. On the corporate side, corporates have got to get more efficient. They want to centralize their treasury departments. They want to centralize the management of their invoicing and their accounting systems. Banks can come along and offer that as a package system to them. So there you have two ways in which you engage your retail customer and your wholesale customer, and maintain their customer service for a long time.
So Kevin, how are you doing this
So,
as a bank?
So just building on Brian's point, I think firstly, one of the key things that came out of the report was that we talk about plus 50% on mobile growth, 80% of that's coming from non-banks. So clearly that's driving significant innovation. What you're seeing is that there are a number of different elements of the value chain that are coming to the fore. So banks have got a clear role to play in the clearing and settlement of those transactions, and also giving supporting the collateral of that. From a corporate perspective, what you're seeing is, for a bank like RBS, where we're operating across 38 countries, you're looking at the connectivity with your corporate client and making that smooth and easy. And here you're seeing a shift to a broader range of connectivity options. So that may be using a cloud connectivity through your ERP, like SAP, for example, or through SWIFT, through their VPN network, or direct to the bank. And from a corporate perspective, our clients are telling us that they want to have a range of options for that connectivity, but what they're looking for is not to be able to just flow payments through, but get good, rich data back and be able to use that and analyze that data successfully.
Do you want to come back on what you've heard so far?
No, I think most of the things have been said. I think what's important to understand is, if you look particularly at the individuals, the major disruptions happening with the combination of digitalization, social revolution, the mobile invasion, if we may say so, completely redefine the way each and every one of us do organize their life. And if you think that the payments are just behind that, it's a fantastic opportunity to completely rethink the way you better serve your customer, the value that you're providing them, and the entire context. Your question is, do banks are better equipped than new entrants? I do think that both of them do have clear strengths to get this industry to the next level, which is maybe a little bit easy to say that, but it's not really, it's a sort of competition because banks do have strengths, very serious ones, and new entrants can really stimulate that.
Well, let's come back to you, Kevin. How can banks and new entrants work together to get us to the next level?
Well, I think we're already doing that in a number of areas, and the mobile area, which we've talked about, is clearly one of those. But also in terms of partnerships with ERP platforms for the corporate clients, and making sure that that deep integration with their systems is seamless for the corporate client, because they're looking for their banking to work perfectly every day in a seamless fashion, and then they're looking for the added value and enriched services off the back of that. I do think that the other thing that's coming out very clearly is that the expectation that the immediacy of payments. So when we talk about payments today, we've got faster payments in the UK. People are not expecting payments to take 1 or 2 days. They're expecting it to be immediate, and that's going to be a big challenge for the industry globally as we move forward.
And what do you guys, I mean, you alluded to some of the things SWIFT can do, just on a general level with regards to the payments market. What role do you think SWIFT could play to help you reach where you need to get? Let's start with you, Brian, first of all. What you'd like to see in the industry?
Well, I think clearly what helps the industry to move forward is standardization. So the more that, because one of the things that the non-banks are doing is they're taking small pieces out of the business, but they're doing it in their own unique way. Now, I think what customers want really is to have a standardized version, so you can, for example, use any mobile to make a payment across any bank. And we are seeing initiatives to achieve that. In the UK, that's work's being done on that. So I think that's the way forward, and SWIFT would probably want to adhere to that in its own services.
Yeah, I think for me, one of the key places that SWIFT will continue to build on is the corporate to bank connectivity, giving that secure support for those larger corporate clients. I think also on the standard side, helping banks and potentially national communities connect better.
I think in addition to what just said, my personal feeling there is that in addition to the operation, SWIFT is a powerful stimulator to really get people together, get this community together, think about what's happening, how to better serve the customer, and share and leverage the power of the community to really make sure that constantly serving better the customer is at the heart of each and every one of its members.
Okay, well, thanks. Do you want to come back?
I was just going to say, I think that the one other point to bear in mind, and it came out very clearly from the review of the regulation and the volume of regulation, is just about, particularly for big organisations, whether that's banks or corporates, operating internationally, is just the consistency of the implementation of that regulation globally. It is very important. I mean, we've seen it in Europe with the implementation of PSD. It's not consistent across the whole of Europe, and therefore that adds cost and complexity, which is something we need to bear in mind.
Okay, well, we'll leave it right there. Thanks very much to all of you
Thank
for
you.
joining us, gentlemen. It's been a pleasure.